Now, the stampede in global markets gathered momentum on Monday and investors piled into safe haven assets as the fallout from US President Donald Trump's tariffs deepened. The carnage in financial markets has analysts betting on 5 Federal Reserve rate cuts this year, up from just 2 last month. The Fed's dot plots project just 2 rate cuts this year, but traders have increased their rate cut projections to 5 this year on recession bets. Last month, just 2 cuts were fully priced. That changed to 3 last week. Now, a total of 1.5% cuts are priced in. The swaps market shows a chance of about 40% that the Fed lowers rates by 0.25% by next week in an emergency move. Those rate cut bets are for well before the Fed's next scheduled policy decision, that's on the 7th of May. Now, this rapid repricing reflects the fear sweeping global markets. The yield on the US 2-year bond, among the most sensitive to monetary policy, fell as much as 22 basis points to 3.43% on Monday. That comes after about 50 basis points fall in total since Trump announced the levies last Wednesday. The bond market is also signaling a Fed rate cut soon. But will the US central bank step in? Will it focus on the massive wealth loss from the bloodbath in markets, or will it look at surging prices from Trump's tariffs instead? The Fed has previously voiced concerns on losses from market slumps. However, stagflation risks are likely to limit the Fed's ability to intervene to support the economy. Still, market watchers expect the Fed to preempt the economic loss and step in. Trump, though, is showing little appetite to back down on aggressive trade tariffs announced last week. He told reporters on Sunday evening to forget markets for a second. Him and his team dismissed investor fears of inflation and recession, offering no apologies for the turmoil marked by sweeping global tariffs and defiantly insisting a boom is on the horizon. For latest news, download the WION app and subscribe to our YouTube channel.